Hey guys, welcome back. In today's video, we are talking about how short sellers have lost $73 billion, collaterals failing, how hedge funds want a squeeze, and many more in this video. First, we're taking a look at this. Just in, short sellers and hedge funds have lost over $73 billion since the start of 2025. Now, bear in mind, and I want to emphasize that this is only talking about 2025. So this is how much money they've lost. Now, if you've been paying attention, whether it was in 2023, 2024, or 2025 as of right now, short sellers have been losing a lot of money in the last 3 years. And so this doesn't come to us as a surprise, obviously, because when we take a look at some of the short sellers that are obviously shorting AMC, and we take a look at what's happening to them, we obviously understand the situation. As an example, two firms, one Virtue, we've seen how their revenues going down, their profits are going down, and their loans are actually going up. When we also take a look at Citadel, which are supposedly making record profits, they're making tens of billions of dollars in terms of profit, but yet they needed to raise cash to give back to their investors. And so we knew the whole time that they are obviously not in a good situation. And the fact that they've lost $73 billion obviously highlights that. Now, something else that I want to quickly talk about this is understanding, just like what we've seen with what banks do, short sellers and these institutions are doing the same thing as well. These $73 billion are what's likely to have been realized already. Now, that's already a huge amount. But the real truth, the real thing that we need to understand is what's the actual floating P&L? What's the unrealized P&L? And just like we've seen with banks, whilst they've talked about they've realized $20 billion, $30 billion, what they don't talk about is how they're in an unrealized loss of over $100 billion. And so for this case, is it the same for short sellers and hedge funds? And my guess is that it's very likely to be yes, and that the number is obviously extremely high. Because when we take a look at some of this, might not come as a surprise what pump stocks were held as collateral for short positions in highly suppressed AMC. AMC holding up well, now just waiting for that magic and sudden breaking point while shorts are fighting for their lives. Because when we take a look at what's happening to these short sellers, remember that they are buying into some of the highest market cap stocks like Netflix, like Nvidia, and of course others as well. One of the ones we know was obviously Nvidia. Now, they use their Nvidia share obviously as a way of collaterals, but now what we've seen recently is how the stocks that they valued as collaterals have obviously dropped drastically in value. And when their collaterals are dropping, their margin, their capital are obviously dropping as well, which is then providing difficulties for these firms to keep up, for these firms to continuously shorting. And so that's what we're talking about when we say that they are fighting for their lives. You can even see here the desperate attempt where we take a look at AMC, and you can see this volume spike. Now, what we talk about and what we can see here is obviously people are buying in, because once we saw a volume that big, the price actually still held. You can see the volume spike at $2.99 was a buying support. Let's hope it will hold and collateral liquidations will burn the shorts. And so that's obviously the fighting point we are looking at. But it's more important. It's more about understanding in terms of that shorts are seeing difficulties right now, and that's why they need to suppress AMC. But the buyers of AMC still understand what's going on, and they're still willing to buy in, because you can also have to understand that moving 80% of the trade volume to the dark to try and fake us does not work. AMC Abe knows the game is how the game is played and will not sell. Our resolve is unbreakable, along with our unstoppable will to continue to buy more at unprecedented levels, especially at these price levels. And so going back to this picture, what you have to understand is that even though we had such a big sell volume, we were still able to hold the price. But the more impressive fact about this is that we held this price with a majority of our trades being routed into the dark pool. So realistically, this maybe only took us 20, 30% of what the real actual buy pressure was, because what we've seen in the past was that anywhere between 60 to 80% of the trades are obviously routed into the dark pool. And so this wasn't a full potential. And so that's what we are seeing right now. And you can see is that people are really thinking that this is obviously a very good price level, hence why people are continuously buying, hence why people are obviously not selling. And that's why the shorts are sweating. That's why the shorts are panicking, because they realize that we all know what's happening right now. We all know that you guys are screwed. And so it doesn't cost us money to hold on to our shares, but it's costing you every bit of dollar that you have to, whether it's to finance these positions, whether it's to finance other positions, whether it's to create new shorts, all of these costs is all eating into them. And that's why they're worried. As always, none of this for every financial advisor. Do take us to kind of soul. Make sure to do your own due diligence and research. But you can see here, my guess, remaining AMC shorts right now, short selling into the hands of a few hedge funds, happily buying at $3 a share just to trigger MOAS and squeeze former short mates when the time is ripe. After all, a much more lucrative case than squeezing retail for a few more pennies. So what this is obviously seeing how shorts are trying to bring the price down. But we're seeing institutions really realizing the opportunity, the potential there is for AMC, and that they are buying it up. And what we've seen recently, whether it's for AMC or GME, is that institutional ownership is going up rapidly. And now this is obviously showcasing something, because what we've seen is that some firms who were once short sellers of AMC, of GME, have actually bought more AMC shares than the actual short positions, or at least the short positions that they are showing to the public. Now, this is obviously a case of that they understand that a squeeze for AMC is obviously much more, like we talk about here, lucrative than the price of a AMC dropping and their short profits. And so that's why they're willing to do this. Now, remember, some short sellers obviously trapped too deep into this. Some have, we talked about the synthetics, the swaps. Yes, in public, what they show to the public, what they show on the database may seem like they only have a small portion, a small position of these AMC and GME shorts, but we've seen how big these swaps are. And again, they don't just suddenly disappear. There are firms who are holding on to these that they're obviously not showing. And so that's obviously what's happening. And so these hedge funds actually want a squeeze as well. You can also see here, Virtue Financial being sued by the SEC government and investigated by former Louisiana Attorney General for market manipulation. So what we are seeing right now is not only are shorts losing, billions and billions of dollars, not only are they losing revenue, losing profit, racking up debt, they're also being investigated. So it's obviously a not good situation for the short sellers, and that's what we want to see. And the reason why they need to do this, why they need to be punished and why we need more enforcement, you can see this. This is how naked shorts kill companies when the SEC doesn't enforce trade settlement. You can see our market cap was over $1 billion and has been reduced to now around $10 million. So this is from Quantum Biopharma, which has filed a major lawsuit against banks and brokers for possible market manipulation. So this is just to talk about just how harmful naked shorting is for a company, for a stock. You can see what was once a $1 billion company is now only $10 million. And this is what we are obviously seeing with AMC as well, how naked shorting is obviously harming AMC. But the difference is that AMC investors are extremely resilient, and we have always knew what was up. And so we have always fought back against them. Remember, they want to bring AMC to $10 million. In fact, they want to bring AMC to bankruptcy. This is something that have been trying for the last 4 years, but have failed, because we obviously have been putting up a fight. And so it's precisely because of this is that we're seeing news like how they're losing billions of dollars. We're seeing news about why there are investigations, because we've held on for that long. We're seeing how other hedge funds right now are willing to actually have a squeeze happen against these other institutions. It's because we have held up against these toxic naked shorts. And so firstly, we obviously need the SEC to enforce trade settlement, but it's about understanding how we've been in this fight for so long that they're worried that the collaterals are falling, that they're failing to push AMC down even with this much volume. And so, give yourself a pat on the back. Everyone needs to obviously understand the whole situation of what's happening and why we need to fight back against these shorts. But like I said, we have always known what's up. Shorts have never been willing to sell, but nor have the retail. And it's been a tug of war this whole time, but it doesn't cost us any money, and it costs the shorts everything. And you guys, thanks for watching this video. I'll catch you guys next time.